Blue Chip Bulletin. Financial market updates and insights.
So today we're diving into Costco's latest earnings, and wow, what a report. I mean, they absolutely knocked it out of the park. Record sales, profits are soaring. But here's the crazy part. The stock actually dropped. So what gives? That's the big question we're going to unpack. What happens when a perfect business runs into a sky-high price tag?
Okay, so here's how we're going to break it all down. First, we'll hit those headline-grabbing, record-breaking numbers. Then we're going to look under the hood at what's really driving this thing. You know, that famous membership Moat and their digital side, which is, believe it or not, finally firing on all cylinders. From there, we'll tackle the big question, the dilemma that Wall Street is wrestling with, and we'll wrap it up with a super simple framework to help you think through it all.
All right, first things first, let's talk about the results. You know, it's a pretty tough world out there for retail right now. But Costco? They didn't just meet expectations, they blew right past them. The numbers they put up really just scream our business model is a powerhouse.
I mean, just look at the sales number. It's just humming. Over $68 billion in net sales for one quarter. That's a massive, massive figure. And it's up 9.1% from this time last year. What that tells you is that when the economy gets a little rocky, Costco's whole value first thing just gets stronger and stronger. This isn't some tiny little beat, folks. This is a huge statement that their way of doing things is absolutely winning.
And you know what's even crazier? The growth is actually picking up speed when you look at their profits. Earnings per share hit $4.58. That is a nearly 14% jump year over year. So it's not just that they're selling more stuff. It means they're getting smarter, more efficient, and more profitable with every single sale.
Yeah, this chart really says it all, doesn't it? It's all about consistency. So on the left, you've got what they did last year. In the middle, that's what Wall Street thought they'd do. And then, bam, on the right, that's what they actually did. They didn't just squeak by. They cleared that bar with room to spare. It's classic Costco, right? They've been doing this for years. Under-promise, over-deliver. It's how they've built up so much trust with investors.
Okay, but let's be real. The sales and profit, that's just the end result. The real story, the engine that makes this whole thing go, is that legendary membership model. You have to think of it less like a store and more like a club, right? A club you pay to get into. And that club is just getting bigger and bigger and way more profitable quarter after quarter. Okay, this number right here, this is the heart of it all. Membership fee income. It grew by a staggering 13.6%, hitting over $1.3 billion. And let's be super clear about this. This is not money they made from selling Kirkland coffee or hot dogs. No, this is just the cash people pay for the privilege of walking through the doors. It's almost pure profit. It comes in every year like clockwork, and it basically builds a financial fortress around the whole company. And this table just shows you how deep that fortress goes. We're talking 82 million paid members across the globe, but here's the really interesting part. Look closer. See the executive members? The ones who pay more for their membership and tend to spend more in the store? They're growing at 9.5%. That's nearly twice as fast as the total member count. And the loyalty? It's just off the charts. Over 92% renewal rate in the US and Canada. It's simple. People sign up and they just don't leave. Now, to really get this, you got to look at their rivals. Walmart, their sales grew 6%. Target, their sales actually slipped by 1%. Meanwhile, Costco's membership fees alone, not sales, just the fees, grew over 13%. That's the whole ballgame right there. While everyone else is in a knife fight for every single transaction, Costco has this subscription machine just humming in the background, pumping out profits before a single pallet of goods is even unloaded.
You know, for the longest time, the big criticism of Costco was, oh, they're just a brick-and-mortar dinosaur. E-commerce is going to eat their lunch. Well, this quarter, the dinosaur didn't just wake up. It started sprinting.
Get this, a 22.6% jump in their digitally enabled sales. I mean, just let that sink in for a second. For a company of this scale, that's not just growth, that is explosive growth. It's proof positive that they have finally cracked the code on taking their value online. What everyone thought was their biggest weakness is now becoming a huge source of strength.
And this isn't just some fluke either. Look at what's behind it. They're pulling way more people into their app. Traffic's up 45%. And they're not just getting more people, they're getting smarter. Just one little feature, those personalized product carousels drove almost $500 million in sales. See? This isn't them just playing catch-up anymore. This is smart, strategic investment in tech, and boy, is it paying off.
But hey, the tech and the memberships, that's only part of the puzzle. If you really want to get Costco, you have to understand their core philosophy. It's this deep-seated members-first culture that influences literally every single financial move they make.
And these numbers here, they show some serious discipline. Their gross margin, it ticked up by just a little bit. We're talking basis points here, which are just tiny fractions of a percent. So when you see their core margin go up by 22 basis points, it means they're getting just a little bit more efficient, squeezing a tiny bit more profit from every sale. They're running a really tight ship. And it's what they do with that extra efficiency that makes them so different.
And boom, there it is. This quote right here is the entire Costco playbook in a nutshell. The CEO, Ron Vakris, basically said, hey, if we get some unexpected money back from tariffs, we're not just going to pocket it and make our profits look bigger. Nope. He's saying it goes straight back to the members in the form of lower prices. I mean, come on, that is how you build an army of loyal fans and that kind of unbreakable trust.
Okay, so let's recap. We have a company that is crushing it on every single level. Sales are up, profits are up, that membership machine is cranking, and their online business is exploding. So the stock must have gone to the moon, right? Well, no, it actually went down. And that right there is the big central conflict that every single person looking at Costco stock has to deal with. And this is the question that's just hanging over the stock. Is it priced for perfection? I mean, the business itself is basically running flawlessly, but the stock is trading at a PE ratio over 52. You usually see numbers like that for some hotshot tech startup, not a retailer, even one as good as Costco. So the big question on Wall Street is all this good news, and maybe even the next 5 years of good news, already reflected in today's price? This slide pretty much shows you that debate playing out in real time. The so-called smart money, the big institutional investors, they are completely torn. On one side, you've got a huge fund like Corient Private Wealth jumping in and buying over 5 million more shares. They're making a massive bet that the good times will keep rolling. But then, on the other side, you have a giant like UBS selling off almost 10 million shares. It is a genuine tug of war between the bulls and the bears.
And yet, if you look at the people whose job it is to analyze stocks, the Wall Street analysts, the picture looks totally different. It's surprisingly one-sided. You've got a bunch of buy ratings, and look at this, 0, not a single sell rating. So the pros who actually put their names on the line with research reports, they still believe in the long-term story, even with that hefty price tag.
So what are we supposed to do with that? You've got the big money doing completely opposite things, but the public ratings are all positive. How does a regular investor even begin to think about this? Well, it all boils down to a simple battle: the quality of the business versus the price of its stock. It's the moat versus the multiple. So here's a simple 3-step way to think about it for yourself. Step 1, really analyze that moat. You have to fully appreciate just how powerful and durable their competitive advantages are, all the stuff we've been talking about. Step 2, you got to look that valuation right in the eye. You have to decide for yourself if paying this kind of premium is worth it for such an amazing company. And finally, step 3, define your timeline. Are you in this for a quick trade or are you in it for the long haul? Because your answer to that question could completely change whether Costco makes sense for you right now.
And that really leaves us with one final big thought to chew on. Look, Costco's a fortress. In the middle of a very stormy sea for retail, it's about as safe as it gets. But right now, the market is making you pay a very, very high price for that safety. And so the ultimate question you have to ask yourself is this: is the single biggest risk of owning this incredibly safe company just paying too much for it?